Welcome back. You're watching Your World at 10. Now, a few weeks ago, we were speaking with Credit Suisse's country head, Mickey Doshi, on the sidelines of a Credit Suisse investor conference. And he told us about a number of insurance companies that were actually pitching to investors, and that the fact that there was a lot of investor interest as well. So we thought it would be a good time maybe to gauge really how ready the insurance industry is to potentially go public, bring in outside investors, how many companies are ready to list, let's say, in the next year or two. To discuss those issues as well as the roadblock to going public, I have with me two interesting guests tonight. Sanjeev Bajaj, he is the Managing Director at Bajaj Finserv, and Ashwin Parekh, Partner for Financial Services at Ernst & Young. Sanjeev, Mr. Parekh, thank you very much for joining us. I'll start with you, Mr. Parekh. Really, how close are we to the first few insurance companies going public? Are we that close? How many could they be? Is there investor appetite? You know.
Sure. Well, we seem to be very close.
Okay.
The reason why we seem to be very close is, I mean, there are 2-3 parts to it. One is the authority itself seems to have recognized that when the new amended, let's say, amendment bill comes in, and when the parliament clears it, then the Section 6AA, which talked about life companies or other insurance companies going public, let's say, after 10 years, that is going to be relaxed. In the sense they can go to public, or they can go and make the initial public offerings at any point in time. So that's the first thing. The second is on their own, as a very sort of proactive measure, they've said that they are going to come out with guidelines on the initial public offering. So therefore, it's a sure indication, basically, from the regulator side, that there is sort of an element of preparedness which has to go in before the offerings are made to the market.
But if that bill doesn't go through, let's say, in the next few months, because it's been pending for a while, then are there that many companies that qualify that 10-year minimum period to be able to go public? Well,
then in that case, the 10-year perhaps may not apply, because the provisions of Section 6A, if those are not likely to be there in the future, whenever, even if it doesn't go now, but it is recognized that they are not the ones who, you know, we would like to follow, then in that case, there is a provision, there is a sub-provision within that act, within that provision section itself, which says that with the central government permission, there can be a waiver of this 10-year period. So soon, I mean, some of the companies have actually applied with the government, and they have requested the government to clarify. If the government were to clarify in favor of the companies that they can make public offering, then I'm confident there will be others as well. In which case, this 10-year period does not become too radical.
So how soon can we potentially see, you know, let's say an insurance company hit the markets? 3 months, 6 months?
See, let's look at it in two ways. One is if the amendment goes through, that is the amendment bill, that is the new bill that goes through, let's say, through the parliament in about 3 to 6 months' time, then we are looking at 6 months. Or if the government clears it, then I suppose we are as ready as in a couple of months' time we may see some kind of an offering.
So if they get individual clearance from the government?
If they get the individual clearance from the government.
All right. Sanjeev, your company doesn't need to go public, as you keep telling me. You have enough money. You don't feel the need to raise public money. But let me ask you a broader question from an industry perspective. Outside of your company and maybe one other, most of the insurance companies are loss-making. So how is this really going to work? Are they going to be able to get that many investors? You know, how are they going to be able to value themselves? Will going public be an easy job?
Well, the question is an interesting question. Now, what you have to see is when you're looking firstly at going public, valuations from what we are seeing are going to be very different for the life company and the general company. So most people are talking about listing first, maybe the life business. Now, in the life business, you require additional capital every year for 2 reasons. Firstly, as you're building new business premium, there's a certain strain in the first year because of the way our accounting takes place, where all our expenses hit us in the first year itself rather than over the policy period. But the second reason is when you're writing business which is not profitable. So then you're actually burning cash. Now, it would depend company to company what the capital is required for. And clearly the multiples or the valuations that we saw, say, 2 years ago, and you know, we have a bunch of analysts covering the industry who are trying to put together valuations. Today, the numbers that we're talking about are much smaller. However, the flip side to this argument is that this will be the first time that the Indian private sector will be opening up for public investments or private placements. So that's a long-term opportunity. And that's why I believe there will be interest, but valuations will be nowhere near what we were seeing in the papers a few years ago.
So Sanjeev, why are y'all not interested really in going public? Is it because as the rules currently stand, it would mean a dilution of the Indian promoter's stake and you don't want that to happen in Bajaj's case?
No, not at all. The main reason I would say for going public would be to to get additional capital to fund the businesses. Now, in our case, if you see, even for all of last year, for 0809, neither of our insurance companies have required capital. Our general insurance company has been profitable from the first full year of operations with ROEs in the region of 18 to 22% year on year. Our life business declared a profit in the first quarter of this year as well. So there's no capital requirement in the next couple of quarters that we can see. Secondly, if the capital requirement is there, which comes for growth, then the two shareholders can fund it themselves. Allianz is doing exceedingly well in the global scenario. If you see, it's one of the few insurance companies that has maintained its stead. Bajaj is doing touch wood okay. So we don't see the reason to go to the market at this point of time.
It has nothing to do with the fact that you have a put option hanging over your head in any fashion.
No, because that put option is the equivalent of that is the call option that Allianz has. So as and when the regulations allow the foreign partner to go up to 49%, I believe Allianz will anyway initiate their option. So that does not come in the way of this.
Okay, but it may not be Bajaj's reason for not wanting to go public. They're very clear they don't need the capital. But for many other Indian insurance companies, the fact that you might get reduced to your Indian shareholding gets reduced, or promoter shareholding gets reduced, will that be a big issue?
It is an issue. In fact, to be very honest, it's something that's now being debated. So, we're now getting an impression that the earlier provisions, when they were drafted, there was some sense of fear, particularly from the Indian quarters, from the Indian, in getting into the insurance business.
Right.
So the entire provision was made in such a manner that the first period, the lock-in would be there, but the first opportunity for them to encash, let's say their investment would come up perhaps 3 or 4 years as soon as the 26 would become 49. Now we all know that didn't happen. For 8 years that did not happen. So the Indian investors or the Indian partners have been sitting on that investment for quite a while now.
Sure.
And they would like to unlock that, in some form or the other. So that's one pressure that's building up on the second is
But if you want to unlock it, then a good way to do it is to go public. So why is that contrary?
Well, yes, but then there are provisions which say that if you moved your foreign partner from 26 to 49, and then you make your offering...
So you get reduced to a minority.
You reduce to a minority, right. Exactly. So then in that case, the whole issue of management rights and, things like those come to the fore. Basically, the board seats and everything else. So that's one of the issues. The second issue is, somewhere along that fear, and then I maintain that has now been replaced by greed. In the sense, it's been 10 years now.
Right.
Some of the very large Indian brands have entered into the insurance business. They've done extremely well. They also know that they've contributed value, in terms of, if I'm buying a life product, for example, I would look at the Indian brand more than I would have looked at the foreign brand, perhaps. So therefore, their contribution has been larger. And now they've reached a point where they certainly wouldn't want that management control issue to suddenly come up to the fore. They've had very good relationship with their partners. They work together in this market, to enhance or grow the value. And they wouldn't want, at this point in time, on account of the provisions of this new, new act, to get into that kind of a situation, basically. So that discussion assumes, a certain amount of significance. I do take it that it assumes a certain amount of... But leaving that aside, let's say even if we assume that two partners work together in putting their equity to the market, you see that there is a buzz already in the marketplace, that a lot of companies have started preparing, in fact, for going to the market, basically. You certainly do see that, in fact, have.
Mr. Parekh, a follow-up question on that, and that is that, will there have to be changes in guidelines when it comes to IPOs to facilitate a lot of those companies, insurance companies that are not profit-making? Bajaj may be, but many out there are not. True, they're all in the red. So, and you need to have a profit track record to be able to go public in this market.
No, absolutely. And that's one of the reasons why, the regulator's office has recognized this. There is a coordination group between SEBI and IRDA, which is looking at the new set of, disclosure requirements, financial record or financial performance that will be essential for the companies to go on to. 3 years performance, for example, 3 years of profitable performance, for example, will be very difficult for insurance companies to really come out with.
So they're working on being able to relax some of those guidelines to facilitate insurance companies to be able to go to the market. Yeah.
And of course, in addition, IRDA will also come out with detailed guidelines, for the insurance companies, just to make sure that the investors go into it in a more organized manner.
All right. So, Sanjeev, last word to you then on this. Do you really think that you will have compatriots in the insurance industry and, as Mr. Parekh points out, hitting the public markets in maybe 3 to 6 months? Does that seem like a realistic timeline?
Well, from what we hear in the market, yes, there are a couple of companies that are quite seriously looking at it, and whether it's getting the central government clearance to do it if the new bill takes some time, or in all probability as we see it, I think the new bill will get passed in the remainder of the financial year. So I expect to see a few companies coming in, and I think that's good. It helps us set a benchmark for the industry. There'll be a whole set of additional disclosures that IID is working on, which will become applicable. The regulator is also working on a method for valuing the businesses. So we will see a lot of these activities coming up over the next couple of quarters. And I think in general it will help investors and others understand the insurance business better. So I see it as a positive move.
All right. Thank you very much, Sanjeev Bajaj, Ashwin Parekh. Thank you for joining us on Your World at 10. It's time for a quick break. We'll come back with all the national and political news.